So guys, once again, thank you so much for this kind of opportunity. I mean, all of us come from a very elite background in terms of your professional experience and the entrepreneurship background that you carry. A young, Adarsh we have here, who's already doing so well, And then look at the profile of each one of you. It is so, exemplary. I think on that note, I think let's once again give a big round of applause to each one of you. The topic today is all about angel investment. How many of you are angel investors? Hope to be. Okay, so it is interesting there. So let me again reiterate. I've invested in more than 70 startups. I've invested in more than funds. I run my own fund. And we also are connected with the world of VCs and PEs, and of course HNIs and strategic investors. So you're in the right hands. Okay. But then I want to make the statement. I learn almost every day. I unlearn also. And I relearn also, because that's the only way you can become better. Reason in that. What is the reason? Unfortunately, angel investment is very addictive. Be very careful, like that. Very, very addictive. Be very, very cautious. Okay, I started in 2018. I was very, very slow in terms of investment. But look at now, more than 70 startups, 9 funds, which means how many more investments? My fund itself has done 23 investments. Look at this. And therefore, it's very, very addictive. But then I want to make this statement. I still continue to invest with a sense of purpose. Very important. I do it with a sense of purpose. At the same time, I'm still on the lookout always for the next groundbreaking idea. What I want to tell you is that startup is all about the groundbreaking idea. It's a very interesting clip. It happened in KBC 2021. Here is a kid, Manas Anil Gaikwad. Let's just enjoy this clip.
इंडिया एक इतनी बड़ी कंट्री है जहाँ पे बहुत पोटेंशियल है, लोगों में आइडियाज तो बहुत होते हैं, लेकिन उन्हें कहीं ना कहीं फाइनेंशियल सपोर्ट नहीं मिलता, इसलिए वो कहीं ना कहीं अपना पैर खींच लेते हैं कि हमें स्टार्टअप तो नहीं करना है क्योंकि बहुत रिस्क है। तो लेकिन मैं चाहता हूँ कि इंडिया में स्टार्टअप कल्चर, एंटरप्रेन्योरशिप, इन चीजों को बढ़ावा मिले। तो इस वजह से मैं एक एंजल इन्वेस्टर बनना चाहता हूँ और उसी के साथ साथ मैं 35 इयर्स तक फाइनेंशियली इंडिपेंडेंट होकर दुनिया घूमना चाहता हूँ।
When I saw
such clarity at 15 years.
At this age, he's this thing.
And he says entrepreneurship, the startup founders need to be supported. So what's the meaning of the word angel?
They will pay from somewhere and do the funding.
They support, right? They support, right? No, but they support, right? But support. Okay. So where did this concept start? Correct. So it started in New York City, okay? The theater artists. So there were a lot of theater artists in Broadway, okay? And the difficulty they had is they had great creative ideas for plays, dramas, but they didn't have anybody to fund them. That's how this angel investment concept came. There were people who were benevolent enough to say that you do it. If you make money, give me the money. Give the money with some returns. If you don't make the money, it's okay. That's why I know that angel investment. That's how the concept came. I'm not saying we should do that. And to give you the background of saying that no, when you get into angel investment, I think we are taking a lot of risk because startup itself is a huge risk. Startup success is rarely immediate. A very important statement that we need to remember for ourselves. It is never immediate. It takes time. Freshworks, we had a discussion, went through its own topsy-turvy situation before it became what we see today. So what I want to discuss today, come on board guys, technology. It always happens, technology.
ஒரு தடவை எஸ்கேப் பண்ணி போற அந்த வீடியோ போட்டுச்சு இல்லையா, அந்த வீடியோவோட டிஸ்டன்ஸ் ஃப்ளோ எக்ஸிட் பண்ணதுக்கு உள்ள வந்தீங்கன்னா கரெக்டா இருக்கும்.
Currently, I've heard of driver को लगते हैं driving में. So I understand Tulu. आपको पता है
He's not able to follow.
If Yes, guys,
Yes, yes.
why are we discussing about the startup world? No?
Exactly.
Exactly. Startup and I can absolutely testify to the truth of what you're saying. The first year is going to be the hardest, but I think in 5 or 10 years it will.
Absolutely. Yeah. So look at this, the stats now. In India, there are almost 120 unicorns. What's a unicorn? Any idea?
Starting $1 billion.
$1 billion valuation.
Valuation.
Valuation, $1 billion. Wow. That's unicorn. More than 120, as of now, 120, unicorns is, expected to grow. We are the third largest in terms of, startup. And look at this, 2025. As of now, we have got, startups like Netradyne, we have got JustPay. JustPay, I'm sure many of us, Portal, we have used, okay? Drools. There are many unicorns, that are coming up. There's a host of list out there. And what is a unicorn? This is the beauty of unicorn. Something that is very, very disruptive. So something, let's say Demytifying. Because it can't be always blue ocean. So many startup ideas, you'll say, oh, so what is so unique? That's why I think innovation has to be understood very well, and probably a person like you will help us understand. Because sometimes I realize there's a difference between improvement and innovation.
Yeah.
So we always say that innovation is to be applauded, but execution has to be worshipped. Because everybody has got ideas and they think my idea is innovative, my idea, but I think if they don't have the execution tenacity, that's why the whole issue comes up. Why am I even saying this? We saw the slide about all these unicorns, but look at this, it's only a mixed bag of opportunities and challenges. Why? There is this report of Huron India, okay, which speaks about also the Indian startups, and look at that, the number of actually startups which are unicorn in reality is only 67 of 2024, not the 120 that I saw as of 2025. In 2025, this number has come down to 64. What is the reason? You know about Byju's, which was a unicorn, no more unicorn, Dunzo unicorn, no more unicorn. You can keep on talking like this. Of course, there are emerging unicorns, Ether. But then the question is, it's always a number which keeps dilly-dallying, which means startup success is rarely immediate. That's the issue. Just save your questions for that because of the time constraint everybody has. So, there is a definition of startup. This is what you understand. What is the definition? A company designed to grow, very quickly. Very quickly. Otherwise, there's no maja. For example, I said 12 years. Mine is a lifestyle business. आराम से, मेरे तरीके से, मेरे time पर. But then startup is not like that. Because there is DPIIT, Department for Promotion of Industry and International Trade, okay, which has got a definition for startup, saying that within 10 years, okay, and all that. Therefore, I have a definition. I say a startup is nothing but a company working to solve a problem. Their solution is not obvious, and success is not guaranteed. That's why you see the percentage of startups. 3, that's quite right. But this can't be the reason why we stop investing. Even today, I continue to look out for those amazing startups because that's the journey. Therefore, I love this statement that where there is a high risk, there's also a high reward. And risk. And I mean it, guys, because if we don't understand the risk-reward equation, trust me, no point getting into the world of startup because one, it's addictive. But then very important, you should be able to become better at this art. I'm still learning, but that's how anybody and everybody does it. I think it's so easy to speak after you have become successful. But until then, I think the journey is always daunting. That's why this beautiful equation is the risk seekers over a period of time they'll be able to make. There is a need for us to become a risk seeker. And why are we becoming risk seekers? Let's understand. We have been at a certain position. We have had the benefit of certain emoluments. We have always been trying to do our best in saving. Real estate would be the easiest option. Probably there are other avenues. But there is still this mindset where I can put my money. One option that is available to us is start investing. So the very first message if I want to give us a takeaway is believe in this risk return theory. Higher the risk, higher the return. Of course there's a trade-off. But that's the first message I want to give you. So it is risk and return. Second, let's move on. Let's try to define what is this angel investor. Who is an angel investor? Also known as business angel, informal angel. Look at the terms. Somebody who funds, private investor, seed investor, no, I can speak 5 languages in Telugu. It's like that. Okay? But the most important is affluent or somebody who is willing to put money in a business or a startup. It's important. More importantly, in exchange for a convertible debt or equity. So it's a high risk. We not speak about debt, convertible debt. We never say debt. This is another interesting way of looking at it. Angel investors, they invest in small startups and therefore small entrepreneurs. Invest in the entrepreneurs starting the business rather than even looking at whether the business is viable or not. It's a punt, it's a bet that we are taking. Absolute bet that we are taking. And look at this, willing to accept risk. If you don't have a risk-taking, risk-seeking attitude, difficult. Then of course, little or no control, there's no control. In fact, there's a joke, when I run a fund, somebody actually questioned me, Shekhar, how do you look at, the return that you need on, the capital that you want? I said, keep quiet. Rather than return on capital, first we look at return of capital.
Save you.
Exactly. So what I'm saying is there's no control at all. And of course, one belief, greatest belief, one day, one day I'll become that star. That's the belief. Like how you're saying 1 to 10 crore.
Yes.
Okay, how do I become that star? And many of us, even me, I'm still an entrepreneur. I'm still and I'm going to become a star. So the thing that has happened recently, it's a recent phenomenon. Please understand, it's only a consultation paper of SEBI because this question may come into your mind. SEBI has actually changed the definition of who should be an investor because they are now called as accredited investor. Typically, angel investors, the rule was if you have your income around 2 crores, okay, which also includes your investments and all that, you can become angel investor. The only exclusion was the property where you're staying. Okay, they have complicated the definition, but already NASCOM, has already put, request to SEBI, why are you complicating? So it's only a consultation paper because somewhere if you hear about this, and then come and tell me, Shekhar, you never told about this. No, don't worry. It's only a consultation paper about accredited investor.
Still with AI, since it's a established phenomenon.
The normal Cat 1, Cat 2, Cat 3, other than angel fund, you only need accredited investor because the minimum sale is 1 crore.
Yes.
Here it is 25 lakhs. Okay? So some amazing people out there. Could be you also one of these days, where your photos also going to be shown there. I'm telling you, it's angel becoming angel investor. First, as I said, risk and return understanding. This is my own personal investment, as I said, more than 70. I can't put all the 70 plus out there. But I'm saying, it's all across different segments, across different funds. I've also got exit and lost money. But that's the journey. It's always the journey. Why do we look at even angel investment? So we know that this is the typical buy: gold, real estate, public provident fund, listed equities, fixed deposits, and all that. But look at this: the sort of return that you get has never been the same as what you invest in the world of angel investment. That's why whenever we run a fund, if you have been part of fund, the minimum IRR that we commit is 18%. Minimum, I'm saying. We have fund that is 20 to 25. That's what we say. That's a range. Not that you can't get in listed. There's a possibility. I'm not saying it won't. But typically you need somebody to actively manage that. Okay, for example, I think both of you, would be experts in that because you're actively managing it. Without that active management, sometimes it becomes difficult. Is the view that we have next week to wealth managers. So this is an alternative investment class that we should look at. So that's the second takeaway. The startup world is an alternative investment class because anyway you want to invest in other things. Why not even your angel investment? I move to my third message. Third, you have to start young. So these days you'll be surprised, people who have started their career, they look at various investment options. One of the investment options they look at is, becoming an angel investor. Probably if SEBI is not very, very forceful on the accredited investor, they can still continue because it will be a self-declaration. Okay? But the point is you have to start young. Look at this guy called Ashish Gupta. He invested in Flipkart, 10 lakhs, became 120 crore. 1,200 times. Without such. Examples, Peter Thiel, $500,000 became $1 billion in Facebook. Jeff Bezos, these are all famous examples, so easy for me to relate to. Because if I give you an example which you may not even find out in Google, it will be very difficult. Similarly, Anirudh Damani, who runs, this Artha Ventures. When you put in OYO, 150 times, is it possible? See, you can call it as an outlier. It won't happen every day. But I think there is definitely a significant opportunity for one or two of your investments to give you significant returns. I won't use the word jackpot, significant returns. The maximum in my case so far has been 6x. I'm trying to see how I can beat that 6x. The typical average I've been getting is anywhere between 2 to 4x. Okay, which is still not a bad, If you over a period of time, 3 years period of time, the IRR is more than 25%, which is still great. Why we are looking at, investing early? Because at a later stage, the opportunity may not even knock your door. That's why I catch them young. Because later on, Freshworks, already listed. Ingeo or share price. Oyo, going to go for listing. Ingeo or Oyo. Second is very important, the ticket size.
Typical tenure, starting to end, what is the tenure?
So it depends on the startup, because today, if you look at some
Average, just an average.
So average, I always say 5 to 8 years. Defense, or let's say deep tech startups, slightly, later. Okay. Look at the second point now. The ticket size may not be the smaller ticket size, it will be significantly higher. Okay, you put $1 billion. Only few people would have the ability to put, we call them ultra HMIs. What I'm saying is they have enough money. So the third takeaway is this: you have to be opportunistic because you can be still part of a young and growing company. That's the opportunity. Flipkart, 10 lakhs, 2007. When Flipkart was bought by Walmart, look at that, 120 crore. Ashish Gupta. Can we be that Ashish Gupta? My fourth point. Warren Buffett always says, don't put all the eggs in the same basket, which means you have to diversify. Why 70 plus target? People used to say, are you crazy? No. Diversify. I've diversified my portfolio. Look at all my portfolio is all in different segments. I'm not in the same segment. Maybe there's a liking for one segment, therefore slightly in that one particular segment it may show a higher percentage. But that doesn't mean, that I'm putting on. For example, 41%, they look as if, it seems to be concentrated, but it's only 41, the rest. Again, I come from a consumer background. Therefore, consumer is always, there to feel, right?
Daily money.
Daily money, right? So the biggest message is, can you build an investment portfolio? Which means it's not a sprint, it's a marathon. It's not a momentum play. You start with your play money. What's your play money? That extra, money that we have with us. You start with that, but you start small. You don't make it big. And that's how you make the money. So my fourth takeaway for you is build an investment portfolio. Don't put all things in the same basket. Can you build an investment portfolio? That's the key. I'm going to my fifth one. We need to have a thesis. Without thesis, it doesn't help. So each one of us, we may either lean on others. Sometimes it may appear like a herd mentality, but it's still okay. If you lean on somebody whom you look up to, or if you lean on somebody who's better than you, why not here? But over a period of time, have a thesis also. What is thesis? Number one, first I will say, how much time can you commit here? Because it's too much, today's startup world, it's too much. The amount of mentorship that you can do, we have so much about it. People keep knocking your door all the time, right? Difficult. So, as an investor also, any investor, time commitment, what's your focus area? So let me just say an example. This is an example of I invest. What's your typical check size? At what stage, in which geography, to fund what sort of startup, more important, in which segment it is, and what is so special about that particular startup. Example, if I were to give you, I invest typically between 1 lakh and 5 lakh. At idea stage or seed stage or pre-revenue or early revenue. It can even be growth stage, but then probably the ticket size
Small, 5x.
maybe too small for that startup, to even accept that money. Or they say 25 lakhs. In geography, could be typically India only, or could be even Middle East. Dubai, today UAE has become so popular. To fund impactful, disruptive, early mover, trendy, or theme, I always say right away. Like in COVID, EdTech, FinTech, was doing so well, including health tech. But today, EdTech, sorry for saying that.
Yes.
It's become a big question mark. Today, what is ruling is deep tech.
Yeah.
Everybody speaks about deep tech, even if they understand what is the tech. How deep it is, nobody knows. But I'm saying, have certain, thesis for yourself in the segment that you want. And last point is so relevant. All of us become with certain experience and background. Why can't we leverage that? Because anyway, there's this entrepreneurial mindset inside. We're all entrepreneurs, right? Though we are calling us as employed, we're all entrepreneurs. Why not, leverage that? If that can also be part of your thesis, I'm not saying in every startup difficult because we don't have the time. Specific startups, we can definitely give our mind share. So the first takeaway is, can we have a thesis? I'll move to my sixth one. Now what is this? This is a movie called Scream. It also had a parody, okay, which is much more comical, called Scary Movie. Why am I even bringing this? I think you need to know how to evaluate startups. And that's a learning, we have to do continuously. This is mine. I love the movie Scream and the parody. So what is a Scream? First is scalability. Do we understand scalability? Do we understand the market size? Do we are not us? I'm speaking about the founders now. And then can we do our own research to understand whether whatever TAM, SAM song or whatever, sorry for the language, bullshit, that's being given, do we truly understand that? And I think we've got a lot of research, we've got a lot of the ability, even to Google out, secondary research and find out, or even question, ask, the other guy to give the data points. That is scalability for me. Do we understand the market? Because I always say that if the market is large, you'll be able to find even customers to a greater extent, because only when you have more customers, you'll be able to create a bigger startup also. The larger market size, the favorable, the attractive market size is the first mantra for us before you evaluate a startup. I mean, Nelson Mandela said something so beautifully. He said, there is no passion to be found playing small in settling for a life that is less than the one that we are capable of living. What a powerful statement. Startup should think like that, right? There is no passion to be found playing small in settling for a life that is less than the one that we are capable of living. If that is the mantra of the startup, and then if you're able to work with the startup, I think we'll understand scalability better. Second is capability, because teamwork makes a dream work. Very, very important. It's not just about the founders. Do they have co-founders? Are they able to build the second line of command? Because wherever corporate we have worked, trust me, it was not just our own intelligence, right? It was collective intelligence. And we were able to rebel and excel, in the way we were able to do. I think that holds good for a startup also. The bigger question from the startup becomes, how do I find a team? That's why we want to look at whether you're capable to build a team also. Resilience. What is resilience? Is competition. How well you're able to understand what the competition is, how you can beat them, do you respect them first of all? Many startups, they've always said, sir, we don't have any competitors, we are one, novel. You could be, but there's indirect competition. What's the biggest competition for Pepsi and Coke?
Each other.
Sorry?
Each other. Coke and Coke.
Fine, okay, but what is the biggest, substitute for Pepsi or Coke? Your water.
Water.
It just quenches your thirst, right? You're thirsty, okay? There will be few people who want, have, Coke and Pepsi just for saying that I have Coke and Pepsi. But otherwise, what's the purpose of that? Please understand, there is always indirect competition. In my business, there are a lot of CFOs who are small, who can do M&A. Can I ever say, they can't do it? Oh, come on, they can do fundraise, they can do valuation. Price may also differ, it will be very competitive, cutthroat. Please understand, startups also need to evaluate, they need to have the resilience. Is there the highs and lows when the situation happens, how well they're able to even look up to the competition and be above the competition. They should always remember that there is competition. Energy, we always look for energy in the founders. Okay? The way they come across, they speak, they want to deliver, they want to actually even give us a confidence in how they'll be able to. They also show their vulnerability, that's also part of energy. It happened like this, sir, but sir, we came back, sir. We did this, sir, we did that, sir. I think that is a very important, because story always is very important, and it has to be not larger than life story, it has to be real story, not real story. Okay, so what we're saying is that it has to touch both the head brain, which is a rational brain, the heart brain, which is an emotional brain, but more important, the gut brain, which is the instinct. Sometimes you invest because of instinct. You feel that. There's a feeling that you want to invest there. A is very important. Can the startup itself anticipate success? Which means have they done enough to ensure that they are able to source and secure that money? Or secure even the mentorship, even the capability that the angel investor has. Sometimes we even guide them to get new customers, co-founders. We guide them, for GTM strategy. We guide them even for the next fundraise. I think they can look, in terms of whom they are approaching, and that's one capability that we also need to develop them. We just don't say, I've got money, I'll put money. No. Can you bring what value that you can add on the table? Not necessarily that the person needs it, but at least can we think through? Bombay Shaving Company, the only reason why we got is we have got connected with the Western Europe in terms of distribution, thanks to my previous avatar. And that is what was exciting for Shantanu and Deepak, and we were able to come. What I'm saying is each one of us has got an ability. Let's, hone that certain.
Little promotion from Bombay Shaving Company. People who don't use Bombay Shaving Company is one of the best quality in the country. Better than Gillette, please try it out. Please continue.
Thank you. Thank you. No, it's actually a great company. Absolutely. It's
I
actually a great
have
company.
personally used both.
Both the hardware as well as the consumable.
Exactly. The last point on the screen is metrics, which I look at sincerely because at the end of the day, if these guys don't know how to measure their own business, how will they manage the business? What you can't measure, you can't manage. What you can't manage, you can't control. What you can't control, you can't direct. If the business cannot be directed, how it is business? That's where the whole effort that we're putting in, right? How to direct the business. So metrics for me is not P&L balance sheet cash flow because they're all chartered accountants. Most of us are here. Okay? Most of us are here.
90%.
Yeah, all is P&L balance sheet and cash flow, but I'm not speaking about that here. I'm asking them metrics like, do you know what your burn rate? Do you know what your cash runway? Do you know what your gross margin? Do you know what your monthly recurring revenue? And therefore, can you look at how your revenue can grow? Can look at what is cost of acquiring customer? Can look at what is the lifetime value of a customer? These are the metrics, right? Which is very relevant in the startup world. And over a period of time, people need to understand that. That is something that we also need to evaluate. So my takeaway for you as the 6th point is evaluation criteria. Can we build something for mine is screen? Yours could be something else. Why screen? When I became angel investor in 2018, I thought people would come nicely to me and ask me for money because they thought I'm an HNI. They were screaming for money. The only thing they asked is, pana kodunga sir, pana kodunga. It can happen to you also when you say an angel investor. Put your LinkedIn. You will see the barrage of emails that are going to come to you. The next is there are homo sapiens. We should not be homo sapiens. Sometimes this fear of missing out is a big thing that sort of affect because angel investment is right. I'm saying this again and again. Trust me, guys. Once you get into it, it's very addictive. Sometimes do it and you will feel to break your investment and then put it here. It's very, very addictive. So what we're saying is that in angel investment, no emotion. Is it possible? We have to develop that. That's why we're everyday learning, unlearning, relearning. So to keep doing that. But the next point is very important. When anxiety and compulsion guide my decision.
Yeah.
I think on this fear of investment, there was one Berkshire Hathaway where annual general meeting where Charlie Munger addressed that a lot of people, are behind the markets and they made crazy returns. The only one word which Charlie Munger said was, which still stayed with me, is delaying gratification.
Exactly, delayed gratification.
Delayed gratification. That
Instant gratification gone.
And then any investment decision which I take in my life, it's like I always think that it will run for another 20 years.
Beautiful. Thank you for saying that because that will be a segue to our next point. Okay. So, important is can we do our due diligence? We are all experts in that. And what is due diligence? We know it is basically looking at various stuff. Right? We are all experts in this, right? Anyway, at least we know the basics. Okay. So my request is because we know it, I think we should. I tell you what, it will help others also, whom we also want to bring as investors with us. I'm going to share the slides now. I'm going to share the slides, okay? So that you find. So, what is my message, guys? No FOMO. In fact, I use the word JOMO, joy of missing out.
Joy of missing.
Very important because I'm still repeating again, angel investment is addictive. Once you get into it, you'll be a different person, trust me. So this is the temptation, avoid the addiction. I'm going to my next point, network. Build a network. For example, here itself, I mean, he's mentoring, I'm pretty sure we got into various forums, CII, FICCI, all have startups. Hindustan Chamber has got startup, initiatives. So I think, try your best in terms of networking. I don't need to teach you most of the Rotarians, okay? What I'm saying is that there are other platforms also. You've got Angels, Chennai Angels, Let's Venture, Lead Angels, itna hai. Kya batao, itna hai. There are more than 30 active platforms. They will ask you some fee. And the fee is not too expensive. So my humble request is if you really want to begin your journey, try and know at least a couple of platforms. Okay, find out who wants to even recommend that, and find out, okay, maybe speak to a guy like me, even I know, I can tell you where you should be. That doesn't mean that'll be great. What I'm saying is, my preference I can always tell you, but there are many. So, The eighth key takeaway is networking. Very, very important. I go to my next one, which is we need to know how to negotiate because it's early stage, right? And negotiation is something that we always know. The only thing I want to tell you is don't feel afraid to walk. Don't feel you're wedded to it. Because the guy and the founders are very smart. They will speak you, they will make you feel as if you're the demigod. The reverence and the sort of, the way, they will be able to speak about you by doing research about you, you will be floored literally. That doesn't mean anything. If something is not going right, be afraid to walk away. The next point I want to really offer is, if you really believe something is there, I think here is the moment for us to offer our support because we have got our own network, our own connects, and we should be able to leverage that. So, most important, please negotiate always, in terms of what you want. I'm not saying that you should always be hell-bent on what you want. Okay? Compromise where it is not so impactful. Where it is impactful, we of course, be clear in terms of what you want, but otherwise, an angel mindset is something that's very, very important. It's early stage, guys. The guys who are running the business and the startup, I don't think they know clearly, in terms of what can, come in the future. They have the confidence, they have the energy, they have the passion, they are willing to put the effort, they are able to build the team, but that doesn't, it's going to come out the way it is, okay? So, how much ever we are able to, you can't do for every startup, but that's why, have your own pace. Your own pace. That's why, it's a momentum, it's not a momentum play. You decide, how you want, play the games. It's a marathon. I got my 10th, look at exit strategy. Always be clever. When will the exit happen? If venture capital firm comes, or let's say the next VC comes, will the exit happen? Will it go for an IPO? Because sometimes angel investment, 5 to 8, sir, can even be 9-10 years. Your money is stuck. So look at, what is, maybe, become much more nimble in terms of what's happening in the outside world. And therefore the 10th is exit strategy. Very, very important as angel investor. What about 11th? I think there's a difference between angel and VC. What is the difference? Right from the source of funds to the investment stage, to the size, in terms of what equity stake you can hold, the involvement as well as exit is very, very different. But why am I even asking you to look at this? If a VC has already come in, the best way is to put your money there. Because for VC, this is what is very, very important. I run a fund. Just because I invest in 20 startups doesn't mean anything. And I tell you, I exited, with X number of returns. That's why you're going to look up to me. Anybody can run the fund. Okay, there are, in India there are 1,500 funds. I'm just one of them. The point is, can you exit? So I think what I'm saying is that wherever VC has invested, I think you can call that shot, in much more better way because we know that a VC would have done much more diligence than us because it's an institution. And they've got the ability to hire people, grandfathered also, to get the DD done, to ensure it is all done.
Sorry, just a question.
Yes.
At the time, if a venture capital comes in, right, will they still be looking for an angel investor, or is it always the chicken and egg? Meaning the angel investor comes first, then the VC. Because once there are bigger players involved, the angel investor, unless you are specialized or enabling them in their kind of nicheness.
Good question, Rohit. Good question. So typically what happens is when a VC comes, that's the best time for an angel to exit because the VC himself will say, also saying that, guys, I don't want the small ticket sales.
Correct.
Because the cap table is too messy. I don't want them. So they'll buy them what called secondary. It's called secondary.
Correct.
A valuation is agreed or the same valuation as the primary and therefore the exit happens. But then in today's world, Ronak, you have to understand we are in 2025, 2021 was a very bad year. All the VCs started putting in money into various startups and therefore the valuation, we had 42 unicorns in that year. Now for the unicorns. Maybe it was revenge investment on the after COVID. Put money. All VCs are fighting to put the money, valuation went haywire. From 22, 23, 24, 25, you don't see that. Very rarely you see that. You don't see that in much more propensity as you saw before. So,
but let me ask a question. Do you think that
can I complete this and then no? So what has happened is that there are micro VCs now. Micro VC, early stage VC, growth VC, late VC. Late VC. Late stage, not late.
They'll be quick money. They'll want to come in the last phase, one or 2 years, and then they'll exit quickly.
Yeah.
That's late.
That's the late.
So micro
traction, everything is there, but if they put the money, they can grow.
IPO. Take them IPO. That's all it is. So because micro VCs are also there, early stage VCs are at a different stages. They allow some good angel investors or somebody who wanting to put more money also to come. Or what happens is, this is where your the angel platform or your syndicate helps. Somebody said syndicate, right? Yeah, your syndicate helps a lot. Your syndicate can put sometimes sizable money.
Because I've seen a lot of deals where they are also happy doing a deal with the vehicle.
Exactly.
Angels are much more secure. Like we'll do a collaborative. Like if they are okay
So
with
if
it,
VC is coming in, or best for syndicate or angels to simply
they get
tag along.
a margin of safety.
No, that I agree. I mean,
But will
from
VC
from an angel investor, it's obviously more safety net kind of.
So let me give you this: if there's an Axel or a Matrix, okay, or let's say Peak 15, okay, if they are coming, okay, then I think it'll be difficult. But let's say it's Speciale Invest, it's Anicut, Capital, okay, if it is Java Capital, okay, which are much more smaller size. I would use the word micro, smaller size. Then I think it
And it
makes
differs from angels also. Like you can do a joint run, like when a VC invests, and obviously Dhoni comes in as an angel investor.
Correct.
Obviously, I would want Dhoni to do a joint run with me, even if I'm a VC.
So it
Sorry.
depends on
Not
who is.
Dhoni.
No, I'm just telling.
Yeah. No, I hear
Just
it.
telling
It
that is
depends on
much
who is
more-
coming in.
Who is coming in?
Yes. Sorry, you had a question.
No, you said in 2020 some companies began to do very well.
Yeah.
23, 25 they started doing bad.
Correct.
I asked, do you think in the next 10 years, because I'm very bullish of India.
So
Even
at the moment, thanks to Trump, like India looks like the next destination, okay, because I think whatever is happening in the US is unbelievable. Unbelievable. Putin is Putin, okay. So I don't think, I think there's a greater focus on the Indian market. But if you ask me, I think I told you, right, it's not just internal, there are external factors which also, sort of, impact. So my guru says this beautiful, for everything to go right, everything has to also go right. Okay? But for something to go wrong, just one thing has to go wrong. That's it. So the message is, if a VC is coming in, get the number one. Okay? Next, what is the role of angel investor? Okay? Clearly, I think this is something that is within our belt. We can easily do all this. My request is, think of this if you want to become an angel investor. Of course, you can be passive. I'm not saying because some of you still be very focused on either the employment, career, and or the business that you want to start, the entrepreneurship. But I think somewhere they should be running behind the mind. So that's the thing. The 12th key takeaway: can you give support to the ecosystem? Put your money where your mouth is. Right? I think becoming an angel investor is beautiful. Okay. Finally, I conclude with this. I keep saying learning. What I'm saying is that can you improve your circle of competence, because there's something called circle of influence, circle of concern. And the only one thing we can become better in life is how wide can we make our circle of influence. Not everything we can influence, but whatever we can. And therefore, how can you reduce the gap by expanding your circle of competence? That's why these forums are all there. The forums, like there are a lot of VCP events, there are a lot of startup events, there are a lot of events where institutions they conduct those events. Then you've got IIT Madras, you've got so much of BIT, you've got PMS. Just I think there's so much because.
Yes.
Yeah, bazaar. That's what they call it. It's unbelievable. If you
really good.
if you are in certain groups, you'll be mad. This event or that event, you'll get confused.
Yes.
So my request is improve your circle of competence. That's the only way we can become better. Therefore, that's my last takeaway. Learn, unlearn, relearn, because that's very important. A guy like me will come here, give you all this bhashan. How do you remember this? So I thought my best I should give you a mnemonic. This is what we went through: risk and return. That's the first. We said where there's risk, there is higher reward also. Okay. Of course, your angel investment is an alternative asset class. You saw the pie chart. It is an opportunity investment because you can catch them young. Very important. It's just like our children. We want to catch them and make them better. Angel investment is exactly like that. Of course, have an investment portfolio, which means don't put all the eggs in the same basket. Spread it, diversification, thesis. I'm not saying whatever I've shown should be the thesis, but you should have your own way of evaluating in terms of where you want to put, what money you want to put, which sector, why I want to put, can add some value. And therefore, the next comes the evaluation criteria, which is your screen, which I showed you. Yours could be something different. And then we saw never ever gamble because there's a FOMO attached to it. Angel investment is addictive. And then networking, that's your net worth. I think if he beautifully said, I was in corporate world for a long time. But now I realize, it's important for me to talk. I realize the same, Rakesh. I was, a nerdy guy because you're a corner office guy. You never wanted to be part of forums, but trust me, only when I started, mingling. I think it's never be single, but mingle is, a beautiful phrase even for us now at this age, for the right reasons. For the right reasons, huh? Not the And of course, negotiate to the best possible extent, but then remember you're an angel. Okay? And then we said exit strategy, have this in the mind. Very important for VC is there, go bindas invest because the VC wants to exit at some point. Aapko bhi aa jayega. And then of course, please remember, we have to be a support of the ecosystem. It's very, very important because that's why you know, we are at that CXO level. Okay, that's why we are called HNI, high net worth individual. That's why you know, we are called. I think we should do that. And finally, keep learning. That's what I say. How do you remember? If you just take the first letter, jumble that, that's what you get as angel investor, and that's what we spoke about today. Okay. So on this note, you know, I want to conclude this beautiful video because this video is always exciting. Okay, it's a song, so don't give me but 2-3 minutes now. Enjoy this video.
You can be very ambitious in what you tackle.
Not the end.
யாருமே நீங்க அந்த சீட்ல உட்கார்ந்திருக்காங்க. அந்த டோரை இடிச்சு உடைக்கணும். और सबसे लंबा छलांग हम ही मारे।
Every time I see it, it gives me goosebumps. And the thing is this, every founder is trying to do their best. Okay? There will be certain unscrupulous guys. Okay, I'm not saying that there won't be. This world has seen that. Even the corporate world, right? They've seen that. I think typically a founder is doing his or her best to ensure that they're able to put the right effort, put the right level of commitment, energy to make their startup successful. Same goes good for us as agents. What I'm saying is that we got to believe in ourselves in what investment we are making, because even if it goes bust, you only become better in the art of investment. You don't suddenly sulk, because it's going to happen. It's going to happen. So there's this beautiful book, by Sebastian Mallaby. Okay, the book is all about telling you that the smallest number of investments generate the majority of returns. It's a beautiful book, okay, which basically says the smallest number of investments generate majority of the returns. What I'm saying is that somewhere in the back of the mind, if you have this philosophy, then I think you'll feel much more comfortable, because what you're seeing as founders, imagine you are also the investors out there as angel investor. Even a VC fund, okay, is taking the money from outside people. There's a lot of pressure on VC guys, because they're putting in the other people's money into startups. Questions are always coming from LPs. They are called limited partners, and we are the GPs, general partners. So, on all this note, what I'm trying to say is that it is addictive, but trust me, if you have a game plan, angel investor is one of the method by which I told you. If you could recollect some of them, anyway, I'll share this. Become better at the art of this because nobody is an expert. And the people who are speaking about how they have become is because of Adivata Kuttumagina. Including a guy like me who's coming and speaking to you is because of them. I'm not success. That doesn't mean I've not had So I always say it's like a boxing match. Defeat is not declared when you fall down. Defeat is always declared when you refuse to give up. So the only thing I need to do is, how well I become better at the art of this. So on that note, thank you guys. Thank you so much for really giving us my That's the main thing.